Okay, so today we're gonna look for the market structure and how to track the trades. Okay, so we have a simplest and the best way that you can use to trade, and I hope it will be your rusty option for you to take the trade. Okay.
Yes.
Okay.
Yes.
By the way, we can say that the market structure look like this way. We say that the price when it come to break this last low, then comes here. We say that the price had made a break of structure, right?
Yes.
So our expectation will be that the price would come back up. This level is what we call a resistance level. Okay. So our price will come back to this level here, then moves up. So by the way, this at this resistance level, okay, at this resistance level is where you go to the time frame, to the smaller time frame or to the lower time frame to find the entry, which will be for this failed overflow. Okay.
Okay.
Okay, we have this failed overflow, or if the price has been engineered, the liquidity has been created a normal overflow. Okay.
Okay.
So without things this market shifty or this price to be creating this engineering liquidity, this means that your setup will be failed, not be varied. Okay.
Okay. Yeah.
Okay.
So we have something what we call a time frame coordination. What is time frame coordination? With us, let me share a whiteboard screen. You see that a time frame coordination that when you look for the level in maybe weekly time frame, okay, this is what's called a constant time frame. So we'll go direct to the 4-hour time frame, which will be the situation 1 time frame, and then we'll go up to the 30-minute time frame, which will be the situation 2 time frame, and they will be go to the 5-minute, which will be the confirmation entry. Okay.
Yes.
Okay.
So what are we expecting, or are we anticipating to see at this smaller time frame, situation 2 and this confirmation entry? We're expecting to see that we have the failed overflow like this way, or we have the engineering liquidity, which is a normal overflow at this level. Okay.
Yes.
But make sure the level is at the support or resistance level. So when you use your daily time frame as a constant time frame, this means that you'll go directly to the H1 for the situation 2, and you'll go to the 15-minute for the situation 3, and you'll go to the 5-minute or 3-minute time frame. Okay, machine entry. Okay.
Yes.
Yeah, this is just what you can do. So let's go direct to the chart and see how can you identify the market. And this is simply when you want to trade the intraday. And by the way, intradays are more it gives us a more profit than the swing trading. Okay.
Okay. Yeah.
Intraday are good for trading than the swing trading. Okay. So by the way, when you say that the price has been making this low, then high, then come to make something like this, lower high, then come to break. So which will be our expected level? Will it be this one or this above? Can you answer me?
The one above.
This one.
Yes.
Why not this one?
The
for me,
one by one.
Okay, for me, it's because the market would always wouldn't the market want to go back to the swing high where the move started?
Okay, this is swing high, right? Then another one, why not this one? And you consider this level?
No, I will consider the first 11.
This one.
Yeah.
Why this one?
Because that's the move that broke the structure.
Yeah, okay, that's the correct one. So we consider this level because this was the high that has broken this low. Okay.
Okay.
So this one will be acting as a resistance level. So the price to this area then moves up. So at this area here is when you come to see at the lower time frame, we would expect that at this resistance level, we have the market shift. What is the market shift? Market shift, then the price has been creating the overflow, or what we call the engineering liquidity. Am I understood?
Yes.
So this is how we can do. So by the way, when we shift to the vice versa, is true like this way. So when the price broke this high, this means that this low is what come to break this high. Okay, so we must consider this as our level. So Malaki, this means that the price will come back direct this level, then goes up. Okay.
Yes.
Yeah.
This is how we do. So let me take you direct to the chart and see how can we observe these scenarios and take the entries. So by starting, we can start with this. This is golden. You see, this is gold. Let's say we use this is our 4-hour time frame. Okay.
Okay.
Let's say we use this is our 4-hour time frame as our constant time frame. Okay, so we use the 4-hour time frame is only for intradays. If you want to take the intradays, you can use the 4-hour time frame, or the daily. If it give you the clear structure, you can use it. But myself, for the intradays, I only use a 1-hour time frame or 4-hour time frame. Is the best for me. Okay. So at this level, I can say that the price has been broke this way. Okay, has been broke this high. Okay. And this candle is what broke this high. Okay.
Yes.
So my expectation will be that the price would come back to this low as the support level, so as to go more highs. Okay.
Yes.
So by the way, we can shift. We are expecting that at the smaller time frame, we can see the area that the price has been engineering the liquidity at this level. Okay.
Yes.
Okay.
So when we shift to the 30-minute time frame, we can see that the price has been engineering the liquidity at this area. You see? You see this?
Yes, I see. Yes, we see. Yes.
So this one, the price has been engineering the liquidity. So this confirms that the market has been shifted. So without the price to creating this engineering liquidity, so that would be a not valid setup for you. So this was a break of structure that happened here, and this is the candle that broke this structure of this high. So below this break of structure, we see that the price has been engineering the liquidity. So when we shift to the 5-minute, we can come we can come here for you to what? So this means that this one will be our level there. You see this one?
Yes, I see.
So when we see at this area, we can see that we have the correction. So let's say we shift to the 15. What are we observing right here? So the same case. Same case. So when we shift to the 5-minute, we can see that the price has been engineering the liquidity up here. Okay, so this is how you can come to refine your entry. So when you shift to the 30-minute, you are waiting for the price to come back at your level, then moves up. So when you make a bar replay, you can see it. Okay.
Yes.
Okay.
So where will be your target? Your target will be at the recent high. So you can press here, or you can press at this wick here above. Okay.
Yes.
Yeah, this is how you can make analysis, a short analysis. Okay. So by the way, the issue is to know the market structure. So this is how market structure look like. You understand?
Yes.
We can take another example. Let's say you have this is Euro card. Euro card Euro AUD. This is Euro AUD, then Euro GBP, Euro JPY, Euro USD, GBP JPY. We have almost a lot of pairs. Okay, let's shift to the GBP card. Okay, as a beautiful GBP card. Okay, we have a good entry right here. So GBP card, by the way, when you see it in the recent price action, what are you seeing here at the current price action?
It's going up.
Yes.
It broke the high, so it is going up.
So it has been broken this high, okay?
Yes.
This means that the price will come to any expected low below, okay?
Yes.
So you can use a 4-hour time frame if it gives you a clear structure. If not, you can use a 1-year time frame if you can see a clear structure. So in a 1-year time frame, we can see the clear structure. We can see these highs have been broken by this candle, okay? So you have to make a look in each and every time frame that gives you a clear and clean structure. You understand?
Yes.
So this low here will be our valid resistance level, okay?
Okay.
You understand? So this low will be our valid resistance level. So at this low, we're expecting that at the coordinated time frame, we can see that we have a price has been engineered. Understood?
Yes.
Yeah.
15. So in the 15 time frame here, you can see that the price has been engineered. You see?
Oh yes, you see it. Correct.
Yeah, this price has been engineering the liquidity, but the price had been making this what we call this much more rejections. This means that there is high probability that at the lower time frame we have another engineering liquidity light here. Okay.
Yes.
So we must come back to the 5-minute for the confirmation entry. So when we shift to the 5-minute time frame, we can see that, oh, the price has been engineering the liquidity light here, okay? You see this one?
Yes.
Yeah.
But this is not clear. Why so? Because we have another low here. See it?
Okay.
We have another low here, and the price has been engineering the liquidity right here. So at this furthermost deviation is where you can come to put your stop loss, and there's almost how many pips? 3 pips. Okay, so most of my trades are arranging for the 5 pips, not more than 10 pips. Okay.
Yeah, I've noticed that.
Yeah, so when we shift to the 30-minute time frame, we can see how the price will reacting at this area. You see it?
Yeah.
You see, so this is our entry. So for the one who took here, is not does not mean that he's not correct. He is correct, but the price has to come back to the confirmation entry which you have found in the 15 time frame. So for those levels that I have taught you before in the previous lesson, we say that we have 4 types of levels, which are resistance, support, and support flip. Together we see a resistance flip. So we say that the price will come back to test the support, the resistance, or support flip or resistance flip. This is what I mean. The price has come back to test the support area. Okay.
Okay.
So, but people who are trading the support and resistance do not know how to trade them. Why so? Because in order for you to take this trade, you have to notify that you have something like this. We have the market shift. What is the market shift? This qualify that we have already in another. We have already in another kingdom.
Another
Okay?
trend.
Yeah, another kingdom or another trend. You understand?
Yeah.
So you must observe something like this has happened in the lower time frame for you to get the confirmation. So you don't need the let's say you don't need the tweezers bottom or the engulfing. Those are bullshit. You understand?
Yeah.
So this is how we do. It's only, you can put your stop loss here, which is 3 pips. Then you can choose any player that you can come to make. Let's say this is, okay, this one is GBP chef. I've made to take this trade in the last week. Let's see this one, okay?
Okay.
So what are you observing right here? We can say that, let's assume you have not this move are not yet. So current, we have this move. So we can say that up to here, we have the break of market structure. You see, this is market structure break. So the price has been confirmed that we are now in a bullish momentum. You understand?
Yes.
So our expectation will be that the price will come back directly to this low as our support. Okay.
Yes.
So we shift to the 30-minute time frame to see what's going on there. Okay. So by the way, in the 30-minute time frame, we have not any confirmation for us to take the trade. All right.
Yes.
Yeah.
So we go direct to the 5-minute time frame, which gives us the confirmation entry. So in the 5-minute time frame, you can see that, oh, you have this low. You see this low?
Yeah.
And the price has been engineering the liquidity right here. You understand?
Yeah.
So when we shift to the 30-minute, like this way, you can see. So this is how I manage to take my trade. So where do I take the profit? I take my profit where this down move has been started. This is where you can take your profit. So for you to take the intraday trade, you can only consider 4-hour time frame or 1-hour time frame. But if you want to take the long-term trade, let's say a daily time frame. So this daily time frame, you can only trade. Let's say let me find here one trade that I trade by using this daily time frame. This Audi JPY, yes, we have this one. This is a 4-hour time frame. Audi card, no. Audi NZD, no. Audi chief, yes. Card JPY, card chief. Let's find any trade that we have made to take through using GBP AUD, GBP card. Okay, you can get the reason why do we manage to take the sell trade at this. Why do we manage to take the sell trade at this GBP card? We take the sell trade at GBP card because the price has been made a breakout, okay? To confirm that it's now a down move. So when we shift to the 4-hour time frame, looking for when we shift to the 4-hour time frame, for us to look for trade, we can see that this is our low. So our expectation will be that the price would come back. Since this has been tested, then the price has come back to this area above, okay, as our resistance.
Yes.
Am I understood?
Yes, very understood.
So when we shift to the 30-minute, this means that our expectation is that the price will come back at this level for engineering liquidity. You understand?
Yeah.
So that is why when I see this break of structure at this 4-hour time frame, I manage to take my buy trade up to this level and then sell there.
Down there.
You understand?
Yes.
Okay.
So this is how we do, man. So by the way, this is a buy trade that we managed to talk. GBP and ZD. Okay. Another one is this one. The same case. We have a GBP USD, Euro USD, Euro JPY. Okay, let's say for this Euro USD. Okay. So Euro USD, when you look to the weekly time frame, so what are we observing right here? Let's say that we do not have this way, okay? So what are you seeing at this area?
Break of structure going down.
So we have the break of structure, okay?
Yes.
What are the break of structure right here? This one is our break of structure that we might consider. Why so? Because when you see in a higher time frame, which is weekly or daily, and you see that we have this week, and this candle has been broken this week. This signifies that we have almost the break of structure at the lower coordinated time frame. You understand? Hello?
Yes, bro.
So sorry, niko zoom na kupigia.
Jina inakuja Godfrey.
Bapira. Umenielewa, eh? You understand?
So, bro, like in terms of break of structure, you look at the candle that was broken. You look at the higher time frame. You look at
the higher time frame. At the higher time frame, when you see something like this, let me draw it for you. You see this one?
Yes.
And then you can see that we have another candle right here. Let's say this one. But this candle has been made a week. So this week, as this candle has been closed above this week. So this signifies that at the lower coordinated time frame, we have the break of structure at that level.
Oh, okay.
You understand? At the lower coordinated time frame. So like this way, you see that this candle has been broken. You see that with the candle body closure below this week. Okay? So when we shift to the 4 hour time frame, we can see we have the break of structure. You understand the concept?
Yes, I understand it. Good. Yes.
Am I understood?
Yeah.
So where will the price go so as for us to take the sell trade after this break of structure?
Over there to the overflow. Is it the overthrow? Yes.
Which is this way, okay?
Yes.
Why do I consider this one as our overflow and not above this way? This is because we have another break of structure at the 4 hour time frame here. You see this one?
Yes.
So this means that this break of structure automatically will come to consider this overflow above.
Okay.
Yes. Yeah. It makes sense.
We can come back to consider this one. So if we have something like this, let's say the price has come back here, then it created an overflow, then the price end here, then it goes up. The price will come back to break this level and come above here and search for the level. But because we have the break of structure at this area, this means that the price will come back to the recent engineering liquidity or overflow.
Okay.
I'm understood.
Yes.
Yeah.
Yes.
So up to here, you can come back to see that this one has confirmed you have already the market shift. Okay, we have already the market shift at this time frame. So why do we refine the entry? We refine the end so as to minimize the stop loss. So if you see that your stop loss is too small, there's no need for you to refine the entry. Okay.
Yes.
Okay. Yeah.
Like this way, when we measure the stop loss, it's only 9 pips. So you can just relax and put your pending order here and then moves up. Okay.
Okay.
You understand?
Yes.
Yeah. This is how a little bit how you can do. Let's say another last 2 examples that you can consider for you to take the trade. Let's say we have this Euro GBP. I'm going to take the sell trade for the daily time frame. I think the daily time frame. Yeah, this way. Okay, you see this one?
Yes, I see. Yes.
So this one, we say that the price has been creating low, high, then low, then something like this. Okay, so this means that the price has high probability of coming back to this order block and then moves up. Okay.
Yes.
So if the price, we wait for the price to come to this order block. So we must find any trade if we catch for us to reach this area. Okay.
Yeah.
Okay.
So for myself, when I take this trade, let's assume we have not this one. Okay, when I see this, I can say that, okay, at this area, we see that this candle has been broke this one. So there is high probability that in a lower time frame, in a lower coordinated time frame, we have the break of structure which is being seen clearly. Okay.
Okay.
So this means that the price will come back direct to this as our resistance. Okay.
Yes.
By then, when we shift to the lower time frame coordinated, we can see we have these areas here. Okay. Do you see this? We have this break of structure. You understand?
Yeah.
Yes,
So
I see it.
currently of this is the price has been here. So by the way, we can say that this one could be our resistance. I'm understood.
Yes.
Yeah.
Yes.
So you come to refine your entry here at the 15 time frame. So at the 15 time frame here, we can say that, okay, this one is our resistance, but below this resistance, we have another level, which is this one. Okay.
Okay.
So our expectation that we have to see that at this resistance level, we have to see that, do we have any break of structure
Sure.
in the lower time frame? Understood.
Okay. Yes.
So in the 5-minute time frame, we can see we have not any break of structure. So you can go much lower, up to the 1 minute sometimes, so as in case for you to take the exact trade. So this one will be our resistance, as you see that it has been tapped here. You see it.
Yeah.
Yes.
Yeah. So when you shift there is no break of structure, you see. But when you shift to the 1 hour minute, 1 minute, we can see that the price has been engineered at the level. You see this way.
Yes, I see it.
You understand the concept?
Yes, I
Yeah.
understand it.
Like this way. So this price has been engineered, the liquidity. And for the risk, you can take this one as your stop loss. But if you are more confident, you can take this one and the furthermost deviation as your stop loss. It's only 0.6 pips, which is too risky, right? So you can press right here. Okay. At this
Yeah.
way. So let's wait for the trade at this area. So this was your stop loss and it has not been heated. You see?
Yeah.
Yeah. So just if in case we have made this as your stop loss, the price could not hit this and the price has been catch the trade. So for our brokers that we're using, this will be sometimes the trade will be missed out, right?
Yes.
Okay.
So you can place your pending order, maybe 5 pips away or 2 pips away, according to the spread of your broker that you're using. Okay.
True.
So for myself, I'm using Tickmail. So spread is only sometimes 1 pips, 2 pips, 3 pips. That's why I took the good snipers like I do. So this is how I do take the trade. You understand? So where could be our take profit? Our take profit will be where do this up move started.
Okay.
You understand?
Yes.
So this
Yeah.
so for intradays, you can use this technique. This you'll be using for all indices in the all market that you want to use, since it is a pure price action. You have to know the market structure, and this is how market structure look like. You understand?
Yes.
Okay.
So for indices, for currencies, for stock, and any other types of market, you can use this one for you to take the trade. Just look for the break of market structure if available. Then you can come to see what is going on at the lower time frame. This is Euro AUD. We can make a follow up together, right?
Yes.
Yeah.
Yeah. By the way, when we shift to the daily, to the daily time frame, it will be more complex sometimes. So to the daily time frame, the price has been confirmed that we have made a we have made a, let's say, we have made a high, low, then high. Okay, so this means that the price has been broken this way. So there is high probability that the price could come back at this low and then moves up. Okay.
Yes.
So we can't say idle to wait for this price come back and test it, then goes up. So we can take the intradays so as it can take us to this low. Okay.
Yes.
So after label that, we have this break of market structure and they have this way. So let's assume we have not this, we do not have this down move. You understand? So since we have this break of market structure, the price would actually goes low, then goes up. This is must, okay?
Yeah.
But it will go up to this low if at the lower time frame, the price has been engineered liquidity.
Okay.
So at the 4-hour time frame for the intraday, we can see that at this area, 4-hour time frame for the intraday, we have this break of market structure happened here. You see this one?
Yes, I see it.
You understand?
Yes.
Yeah.
So this confirms that we have the market shift, so the price will come back here and then moves up as to this low. Okay. So you can move to the 30-minute time frame for us to take the trade. So for the 30-minute time frame, this is a break of market structure right here. And by then, the price has been engineered, the liquidity above. You see this?
Yeah.
Okay, so you can move to the 5-minute for the best confirmation. You can see that at this area, so this means that at this 5-minute time frame, the price has been engineered, the liquidity right here. You see?
Yes, I see it.
Has been engineered here. So this is where you can put your stop loss at this furthermost deviation. You understand?
Yeah.
Oh, okay.
Yeah. So this, you can see the price has been tapped the entry and then moves down and then hitted the TP. You understand? You see that your stop loss has not been heated.
Yeah.
If you see it is not more, if you see that it is more risky, you can press above here. So up to this area, the stop loss was only about 1 pips, if I'm not mistaken. No, 2.7 pips.
Yeah.
Which is a good entry for us, okay?
Yeah.
So the good thing that you have to see that at the lower time frame, the price has made a market shift, which means that the price has been engineered their liquidity. You understand?
Yeah.
Without a price to be engineering the liquidity at the lower time frame, the broker will kill you, my bros.
I see you. I see it. Yes.
Yeah. So let's see at the last example. Our last example. Okay. Let's see your last example right here. You're a chief. Okay, I've managed to take this trade. So for the weekly time frame, there is not much you can see, okay?
Yes.
The weekly time frame. You can see that the price is here now. So there is high probability that the price is touching this level below. Okay?
Yeah.
Yes.
Understand? So the price is here now. So there is high probability that the price is touching this level. You understand?
Okay. Yes.
So you can come back to our time frame, which may be the 4 hour time frame. So for the 4 hour time frame, I've made to take the let's say to the daily time frame. So this is daily time frame. So what are you observing here in the daily time frame?
We broke the structure to the downside.
This way, okay?
Yeah.
You understand?
Yes. Yes.
Yeah.
Yeah, we have this break of structure to the downside. So there are high probability that the price has been broken the structure clearly at the coordinated lower time frame, which is B1 year. You see this break of structure.
Yes.
Yeah.
Yeah, but currently, what do we observe here? Let's assume that currently the price, when I took this trade, I see that the price is here now. When I took this trade, I took this sell trade. Let me clear this one. I see that the price is here now. You see this one?
Yes.
So we have this break of structure. Do you see this?
Yeah.
Yeah, we have this break of structure. So there is high probability that the price could come back to the either engineering liquidity or this one. So when we see at this area, we see that this one will be our level, okay? Yeah, so
yes.
when we shift to the 15, we can see that the price has been engineered here. You see this one?
Yes.
Yeah.
Has been engineered here. So by the way, when we shift closure to the left side, what are you observing here? To the left side, we have the old high, which is this one. We have the old high.
High.
So this old high means that the price has been engineered here. So we can't consider this as our high since we have the old high before.
Okay.
You understood?
Yeah.
Yes.
So you can ignore this and they can come back to refine this one. Since it has made a wick, so we can come back and refine this. So we can come back to the 5 minute and refine this old high. So we can say that this one is our old high. You see this one?
Yeah.
And then you can go much lower to the 3 minute. The 3 minute. So we can say that sorry, someone is calling. Oya, boya. Oya, uko napiga bia. Mko na ndinga. Bwana. Oya, mbona hamna mademu? Hey. Oya.